The information displayed in this broadcast is known to cause increased amounts of FOMO. Wells only and his guests are not responsible for any losses you may accrue for having weak hands. Where the haters at? Yeah, bitches still ain't showed up. And now, right, we got Hex, flawless uptime. People thought this was a joke. Now they're mad at the chart. It's lullaby music, really, right? It's hard to believe that something like this exists. I get it, but you just gotta come to terms with reality. It just exists. Nothing we can do about it. Buy a steak and chill, baby. Shout out to Marketable Thoughts. You can't get this kind of shit for free anywhere else. And it's very important to understand that. We're handing it out. People thought this was a joke. Now they're mad at the chart. So much luck, once again, because the facts don't give a fuck. Peace. What's good, fam? A happy Tuesday to all. Hope everybody's having a good one. I'm having an outstanding day. I cannot complain. So that's all I got on that front. It's getting crazy out there, people. I don't know if you guys are paying attention like I am. Meaning I can't take my eyes off the screen. And because it's getting really, really interesting. Now, what do I mean? Well, the effects of de-dollarization are really starting to take hold, and you're starting to see it materialize in a lot of ways. And I don't think people realize that that is what's actually happening. So we're going to talk a little bit about that, and hopefully come across some eye-busting information, the type that you just can't ignore, right? Because that's the good type. Give me a second. Let's see here. Just getting these levels in order before we get started. But we're gonna start with the news. I mean, it's just a lot of good flow today in terms of information. So actually, let me share my screen so we can start with that. All right. And I'm pretty sure. Oh yeah, there's something else I wanted to share, but I'll do that tomorrow. So first one that really stood out to me, two Delta planes collide at the airport. I mean, they're on the ground. We're not even talking about in the air. They were getting ready to leave, and somehow, like, I don't understand. Like, how do you do that? What is it? Do the air traffic controllers not do anything when the planes are not in the air? Like, is there nobody? I know there's ground traffic controllers, as I see them when we're sitting in the plane. So, what exactly? Let's see if we can get anything from this video. Doesn't Nope, nothing. But you can see the damage after the fact, which is great. But I mean, this is just a trend. You know, this is a trend in America that is becoming so common that it should worry people, and people should definitely be livid that this type of nonsense is happening here, because it's not supposed to. But yet here we are. Give me a second. That's 1.5. 70% of 1.5. 15 7 times. All right. So that's 45. Oh, okay. All right. So yeah. So those are the kinds of things you guys got to keep in mind. How do you rationalize this, especially with younger people growing up and becoming part of society and trying to understand how the hell we even got to where we are. I mean, the world makes no sense, and the media is controlled by the people that want it as is. It's not controlled by us normal folk. So, how do you justify that to a child or to an adolescent or to a young adult? I mean, you don't. You don't. You explain that there's shit going on and that there's a struggle because people have to understand. Because all of this is part of that. I mean, you kidding me? This type of shit would never ever happen fucking 5 years ago, let alone 30 years ago. I mean, we're talking about a time when everything was made damn near by hand, the machine. And everything is supposed to be so much more superior and whatnot today. And what do we get? This. So, understand that all of this is a part of de-dollarization. You have to realize that. That is crucial. Nothing happens in a vacuum, pretty much, is what I'm getting at. And the reduction in quality, the reduction in service, the reduction in everything in this country, or really worldwide, is just a function of how society got to where it is today. So, what's the solution? Right? I mean, that's really the question here. And the sad fact of the matter is that there really isn't one, right? Because, think about it. Um, how do you make sense of nonsense? I mean, you can't, right? And I think that's the thing that people have a hard time understanding or um, maybe not understanding, but more so being able to rationalize and communicate with others. Because that's a problem. We live in a society where the mental institutions apparently think that they don't have to do anything but wrong. There's a lot of people that have been encouraged to be insane. And that is a function of all of the stuff that we see that's promulgated and and pushed on people that don't want to see the shit. Don't, you know. Hell, I'm the type of frame of mind that reality is you don't even need all the sexualization that occurs in Hollywood now as is. So why do we need to step it up a notch? We don't. We can actually cut it all the way the fuck out because everybody knows what it looks like. And if you need to be watching it on TV, well, then you got problems. You need help. Now, let's get back to the news. I've never seen anything like that. Now, this is in regards to crude oil. Now, this is crude oil today. It literally just collapsed out of nowhere. Well, not out of nowhere, right? We've talked about how the market was structurally bearish, given the moving averages and whatnot, and we were just looking at the levels as far as VWAP and annual VWAP and quarterly VWAP. And let me zoom this out a little bit. And how we're near a support area, right? 62, which I haven't talked about all the way down there before, but looks like we're going down there. 64, 65, and we went all the way as low as 65.27 today. Yep, 65.27. And the market is really seemingly reacting or taking into account um, the lack of market demand. Like, apparently, people are just really not doing anything. And we're seeing it. And guess who else is seeing it? OPEC. And because OPEC is seeing it and the market is seeing that OPEC is seeing it, finally, by admitting to it, we get today, which was a huge, I think, 3% down day, 2.5% down day. Oh, lying. Almost 4.5% down day. A total of $3 in terms of range. High to low, almost four. I'm lying. It was only off by about 20 cents. So we're stretching the realm of opportunity and as far as how low price can go based on the volume weighted average price. And the market, we talked about this yesterday. It can go as low as it wants to, right? Even though it's here. And again, it structurally is weak, right? But we have to watch what's happening under the hood. And that's when looking at volume comes into play. And we're already hitting extremes as far as volatility goes. We already are, looks like we hit 100 today. Hold on. Yep, hit 100 today. So one of two things is going to happen. We consolidate or we continue lower. And if we continue lower, well, the move isn't going to stop until volatility exhausts itself on the way down. So we'll see what happens. But it's a big story. The market is paying attention in a lot of fronts, and you'll see it as we go through the data and whatnot. But it's something that people didn't expect it. People were definitely betting on $100 oil, not $50 oil, and that's how markets work. Right. This is why you got to pay attention to the crowd, what they think, and if you're ever aligned with the crowd, you're wrong. I mean, it never fails. Like, it's just the way that it goes. Now, check this out. Biggest Ukrainian drone attack of the quote unquote war hits the international airport in Moscow. Now, I don't really know what people think of Russia or whatever, but you got to understand that the U.S. is really putting itself in a precarious position as far as inviting problems ashore, right? I mean, it's imperative that you, as a person that lives in this country, comprehend that. Because where do you think they're getting this tech to do this shit? Ukraine is not at the forefront of weaponry in any fucking way, shape, or form. Period. So clearly, the West is backing their tactics, their weaponry, their logistics. I mean, this is literally a proxy war between the United States and Russia, and it's obvious to anybody that's not retarded. So as I sit here and think about this and how obvious it is, I'm guessing that the masses will engage with reality once bombs start getting dropped here and people start asking why. Because why would this happen? The fight is over Crimea, not Moscow. So now you're expanding the field of battle, which is literally detrimental to Ukraine's abilities, tactical abilities. And, what then? Is the U.S. going to start physically intervening because of that? And, there's already people, boots on ground, that are red, white, and blue. And they're doing it out of ignorance, right? They don't really understand what they're doing because they're just living their little life. They're not tapped in with anything that's going on. And there's a lot of people in the military like that they don't really have a clue. They're just listening to Uncle Sam and that's it, not doing any math outside of that. So important people realize that. Nonprofits sue IRS alleging political speech rules not applied equally. Uh oh. Two Texas churches and a couple of nonprofit organizations with tax exempt status are challenging the IRS in federal court over alleged violations of their freedom of speech, free to exercise of religion, and equal treatment under the law. Now, I want to make it clear that literally anybody that's normal can sue under in federal court, literally this last damn line. Everybody that's normal can sue the media, the government, all government agencies under that line. Think about it. The group alleges that numerous churches and quote left leaning end quote publications that are owned by tax exempt nonprofits routinely support Democratic political candidates in violation of the Internal Revenue Code with no repercussions, while conservative churches and nonprofits are threatened and penalized. In the complaint, the group cites examples of nonprofit media organizations appearing to endorse President Joe Biden, Vice President Kamala Harris, and other political figures, as well as church leaders praising Biden, former Secretary of State Clinton, and former President Barack Obama during services while they were candidates for president. Quote, plaintiffs believe that the activity described demonstrates ongoing, open, and obvious violations of the law by churches friendly to Democratic candidates, the complaint states. However, the complaint continues to allege plaintiffs contend that all such activity is constitutionally protected. Plaintiffs only seek the freedom to engage in similar activity. Imagine living in a world where you have to sue to stop getting fucking picked on. That's literally what that just stated. Wow. This is how ridiculous things are. People have to debate normalcy because psychos are literally thinking that they can do what they want. Because we, as nice people, let them. And there's gonna come a time when we're gonna have to stop them. Because psychos are psychos. And I don't think people realize that these people are just not going to stop being psychotic. I mean, goddamn. You would think 2020 would have showed you something, but a lot of people just don't get it. In 2020, a church called Cornerstone Chapel in Leesburg, Virginia, you might remember it, was fined after its pastor told congregants to vote in line with the values set forth in the Bible and said the Republican platform was in greater alignment with the Bible than the Democratic platform, according to the legal filing. Wow. I mean, if you're listening to this and you're not in shock, I don't know what to tell you, but you should be. An organization called Christians Engaged was also denied tax exempt status in 2021 for Bible teachings on topics that, quote, are typically affiliated with the Republican Party candidates and candidates, end quote, according to an excerpt from the IRS letter in the complaint. The denial was later reversed. So the fact that they reversed the denial only augments the points that are being made in this claim. Because here's the thing, they could have just stated anything else and be like, nah, we're denying you for this and that reason. Right? And that would have been that. Nobody would have been the wiser. But if you're reversing it, man, that's admission of guilt right there. Because why would you reverse it if you didn't mean it in the first place? If the reason wasn't valid in the first place, why the fuck you do it in the first place? And that's how we know we can't trust your fucking opinion. To plaintiffs' knowledge, no investigation and particularly no adverse action has ever been taken against any left leaning or Democratic affiliated nonprofit, the complaint states. The proportion of adverse actions taken against 501c3 nonprofits skews disproportionately against conservative organizations. And you know what's funny? You could literally not prepare this claim in court or for court. You literally like all this writing that they did in this brief to present to this to put in the claim and all of that, so they could submit the brief and all of that and get it in the system. They literally could have just wrote a sentence and been like, "We'll show visuals live on social media in the court." Like one day somebody's gonna fucking do that and set that precedent in court, and that shit gonna be valid as fuck. It's gonna happen one day because you don't even need the rustle up examples. You can see it in real time nowadays. The political accostation and harassment, you can see it. It's not hidden. These motherfuckers do it in your face. So this is why when we started reading this, I literally stated everybody that's normal can literally sue under the law based on this line. Alleged violations of your freedom of speech, your ability to exercise religion, and your ability to receive equal treatment have been breached long ago. You cannot defend yourself. You cannot state your fucking mind and your opinion. And you cannot be a God fearing individual, apparently. You can only worship Satan and shit like that. So literally anybody that's normal has a fucking legal claim. And it's shit like that that drives me personally up the wall because it's obvious as fuck, yet nobody sees it because they're too busy with their head up their fucking ass. I mean, imagine 150 million people suing all of these fuckwad agencies. Imagine that class action. Woo! Them lawyers would be pissed. Because if you win that, you killing half their food. Because you got to understand how the system works. All these motherfuckers are tapped in. They all tied in. They all work together. They all eat together. That's why the people being ignorant is exactly what has us here. Let's keep on reading. We here? Yeah, for an organization to be considered a not-for-profit charity, it must not participate in or intervene in, including the publishing or distributing of statements, any political campaign on behalf of or in opposition to any candidate for public office, according to a 1954 law known as the Johnson Amendment. So, based on this amendment from 1954, no religious entity that supports any political affiliations of any type should be granted 501c3 status. Yet we can visibly see how that is broken every day. And we've been seeing this since 2020, face in everybody's face, light work. Think about that because you have a claim. I mean, it's 150 million people versus maybe 10,000. And I'm really stretching out that 10,000 number. It's definitely not double digit five figures, it's four figures. But, let's just make it realistic, I guess. But that's the battle that's being fought right now. 150 million people, probably really a billion versus 10,000 in reality, because those 10,000 control so many resources and assets that it seems like it's not 10,000. And that's why people have to do things like this, file lawsuits to point out political discrimination. Let's keep on rocking. Ally financial craters after auto lender reveals surging delinquencies, charge-offs. Charge-offs are when you're writing off a loan that you know you're not going to get your money back on. So delinquencies are loans that haven't reached that bad of a stage yet. So it's a problem. JP Morgan is tied in, of course, with this issue. As you guys can see here, they've dropped from, is this just a day? Sure is. Uh, no, that isn't just today. What? What are they doing here? They're trying to say this is the open? What the fuck? Well, you can tell that this stock went from 2017 and a half, 217 and a half, excuse me, $217.50 all the way down to $2.03.5, basically, all in one session. And I guess after hours is what we're seeing here. Yeah, this is after hours right here. The portion that's on the right side of the dotted line is for the after hours. All right, let's see here. Is today the 10th? Sure is. Oh, damn. All right, so that's the day. Uh, Ally Financial. Here's the chart on that stock. And yeah, this is pretty freaking ugly. 17% drop in one day is pretty screwed for a stock. That's about a fifth, if not a sixth. So the whole point of looking at this story is just understand that now we're at the point in the problem development process of getting to a recession where consumers are strapped, revolving credit monthly change increased 10%, whereas a non-revolving, which is like loans and stuff like that, has increased 15%. Now, with no savings to speak of, how is that positive for the economy? It's not. We just, I just thought this was funny. Uh, Apparently, one of the presidents of JP Morgan thinks that analysts are too optimistic, so that sent the stock down also, on top of everything else. 47% of voters, all voters, think Harris is too progressive. Um, I'm trying to see where they get this from. New poll suggests. Here we go. So this is from New York Times. Apparently, it's a free link. I guess it was a New York Times poll. I guess so. Hold on. Time. Yeah, it is a Times poll. Times Siena poll. Okay. Trying to figure out if they provide their methodology here. So the methodology will let us know exactly how they went about determining this headline that they're using. And that's really what I'm looking for. But apparently, they're not going to share that. So, in this poll, the risk associated with the strategy or evidence, blah, 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 blah. All the stuff that's obvious. Think about the fact that there exists a political party in a country in 2024 that, despite a month of favorable coverage, voters still don't know enough about this candidate. I mean, there are people that will say that they're going to vote for this person, and they can't speak to anything that this person has accomplished, and why they will vote for that person. So it's pretty funny because all they literally have is hate Trump. Like, that's all that they have. So they're really gonna have a hard time cheating this year. It's about to be real, real fugly. So check this out: looting hits Gucci store in D.C. D.C. as chaos breaks out in city center and Georgetown areas. I don't know if you guys know about D.C., but this is basically where all them boys are at. So what is going on? I mean, it's getting crazy out here. So it's getting it's funny. Obama lawlessness. Oh man. And of course, DC is a Democrat run city. So it's not surprising that shit like that is going down there, because that's where that shit happens at. Now let's see what latest nonsense California's trying to pull off, which is not anything out of the ordinary. This retard wants mandate for oil companies to create a stockpile of gasoline. So now you want to legislate what you fucked up. I mean, this is just as bad as trying to tell people that you can control prices. You cannot. You cannot control prices, just like you cannot carve out a little piece of supply for yourself and not inflate the cost of that same good, you dumbass. Jesus Christ, man. People are retarded. Now check this out. Big win. EU celebrates as Apple loses 13 billion Ireland tax bill case. Now, outgoing EU chief da 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 da. Da, 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 da. Let's see. The Court of Justice confirms that Ireland granted Apple unlawful aid. Unlawful aid. I don't know what that means exactly, but we'll keep reading. Which Ireland now has to recover. And the Commission's decision The Google shopping antitrust case. Imagine a fake court tells a country that they messed up by giving a specific country, or excuse me, company, a certain financial incentive. That's what that just said. And of course, Apple's going to play along. I doubt they're going to appeal this because you guys have to understand how this works. The goal is for a global financial system to be interconnected at all fronts so that we're paying taxes at all fronts. This was a super interesting headline because the US just said, hey, we're getting out. We're getting out of the US or out of Iraq all the way. So why are these people still fucking around? Iraq rejects US accusations of enabling Iran oil smuggling. The US is really in a lot of places that it just doesn't belong. DOJ admits illegal immigrants stole American ID, voted in US elections. Meanwhile, the US completely ignores this and is more focused on what Iraq is doing with Iran, with their own oil to Iran. I mean, this is what's going on. Secretary Blinken, of course, Department of State, all right, visited Haiti as U.S. backed police fail to wrestle control from gangs. Now, they sent the Kenyans out there. And if you know anything about anything, you knew that shit wasn't going to work out. Which countries dominate the supply chain for strategic metals? What's a strategic metal, you might be asking? Well, let's take a look at this graphic. In Australia, China, Chile, Argentina, uh, lithium is considered a strategic mineral. Cobalt is considered a strategic mineral in China, Congo, Australia, Indonesia, Finland, and Canada. Oh, and also Russia. Natural graphite, another strategic mineral. And whatever rare earths is, because they're not breaking that down. But we'll just ignore, I guess, that last one. Not really sure what I'm supposed to do with that, but maybe they'll give us something in the text. But this graphic, you guys could take a look at it. This is where a lot of the focus is, if you really pay attention to a lot of the current conflicts that are currently ongoing in the world. It's no surprise that all these countries are in one way, shape, or form touched by nonsense. Let's see if we get what is it? Was it base rare earths? Rare earths. Let's see. They talk about anything. Nope. All right, we'll keep moving. Maryland bill aims to protect farms from eminent domain threat for new AI data center power lines. So we've talked about this several times over the past few weeks. As you guys know, this is the latest threat to American people that the government will use to essentially make your life annoying and just loathful. Professor, people's street race should be included in U.S. Census. Now, I never heard of a street race before. So I'm pretty sure a lot of people that are watching this have not either. So let's find out what it is. Street race is how you believe others see you. These retards, man. Oh my god. Ah, gotta help these morons. All right, back to the charts, man. Let's get back to reality over here. Well, we fabricated reality at that. So here's crude, and we already talked about it a little bit. It's looking a little hurt. It's on its knees, and if you look at a weekly chart, it's really hanging, right? And if we look at momentum, this was when the market was, yeah, getting up to 120, 130 back into the run of the Ukraine Russia situation. Um, and ever since, the market's kind of been, hold on, guys. It's been a good one today, though. Been relatively quiet. And ever since then, the market's been kind of just trying to pick itself up, so to speak, but it really hasn't. And what's interesting is, as I look at this pattern now, it reminds me of approximately 10 years ago when the market kind of did something similar and it ultimately fell off a cliff. And I'm not even talking about this. I'm talking about this here. Um, After 2009, the market bottomed out and it ran up and it just could never get back up again. And of course, you don't want it to because it's super expensive, right? $100 a barrel and whatnot. And all the crude oil producing countries, I mean, they were crushing it. This is back when shit wasn't as expensive as it is now. And now prices are 70, 60% cheaper than they were during the first half of 2010, the tens, 2010 to 2015. When we're talking about an average oil price of 75, $80 a barrel, maybe even 85. All right, maybe even higher. Who knows? Because I'm not really doing the math here. I'm just eyeballing it. But long story short, the price was unsustainable, right? And why was it unsustainable? Well, fuck. Who the hell could just give you $5 per gallon just because you fucking feel like it, motherfucker? Nobody. So the market has to correct, right? And it's something similar to that. I mean, it doesn't look similar here, but my thinking is we're in a similar type of scenario, whereas maybe prices are literally too goddamn high. And I mean, look, crude went from 115, $110 all the way down to 26. All the way down to 26. So, what's to say the same thing cannot happen again? And what's to say we're not already in motion for that same thing to happen again? I don't know. But what I do know is it's rather peculiar that we're finding ourselves in a relatively more dire economic scenario than we were back at that point in time. And when you look at the chart, the market's been trying to get up ever since it hit this high, and it just has not been able to. So it's interesting how we have a similar setup. And let's look at what these trend points look like. All right. Just want to see what these. This looks okay. Meh. It's all right. Downward trend. I mean, this almost looks like a some type of flat wedge. Um, Hold on, guys. All right, it almost looks like a little pennant, a little flag pennant. And here's the thing: if we lose this 60 area, there's no telling how low we're gonna go, but we're gonna definitely go low. Who knows? Maybe we clear out all of these levels and trade down to 45, 40, because that's a support area down here. So it's entirely plausible. Um, So, we like to keep an eye on all possible scenarios and figure out what we could potentially see or not. I mean, look, you even got this VWAP, and I think this is annual. Yep. Annual VWAP that hasn't been retested since it got established back in 2020. So that's a good level candidate to stop the market from trading lower. But, it's just the start. And here we are paying attention to the economy and not all the geopolitical risk that is inherent in this market. When you look at the base case for crude, very rare is the instance in the market where geopolitics does not trump economics. This is rare. So theoretically, everyone is living through history from that perspective. Important to note. Cotton, just want to bring it to everybody's attention. We made the move yesterday that we were waiting on. And let's put the, oh, okay, should be on. Why is it not showing? Um, I don't know if you guys remember, but it was reflect. Ah, that's why. Yeah. So I don't know if you guys remember before. Um, let me just zoom in. The market had a similar pattern I was identifying as support down to 67.5, and the market actually tagged 67.51, which is pretty much around where you wanted to see and bounce off and whatnot. Anyway, we got the bounce, got the tag. You cleared out the level, which is good. So theoretically, from here on out, the market should recover its bullish trend, or it should start going up. Where essentially we're in stage one accumulation from here on out. That's what we should start seeing developing in the chart if we are going to indeed reverse, because this is a pretty decent downtrend. We're talking about from 104 all the way down to 66. So that's a pretty sizable drop. That's about 40, 35%. So nothing to scoff at. Right. So the market has to find its footing. You have to let it show you, because as you can see, the moving averages have been bearish for a while, really over 2 years at this point, almost 2 years. Really, you can. I like to go when price is under all of them. So we're literally at 10 days away from 2 years of this market being structurally bearish, right? And the importance of that is understanding that the market is heavy. And it's heavy until it starts showing you that it's not. And even when it starts showing you that it's not, the probability of it still being heavy is there, because these markets function off literal supply and demand. Let's take a look back in history. You see that there are a couple of bull runs here, right? And let's measure them out. And this is just for your edification, really. Um, where is this damn thing? Here we go. The bull runs that I see, as I see them in terms of realistic and whatnot. I'm trying to remember what. I think it's $5 a tick, so that's like $50 a point. So it's like $5,000 every time it moves. So I can't remember what the hell. Hold on. Futures. Just trying to remember what the profit is on this thing. Cotton, $5 a tick, all the way out to four ticks. Or I'm sorry, four decimal spaces. So that means five times. Wait, these things moving what tick increments? Yeah, one, right? Yeah, so I think every tick or every time you see the market tick, it's like $10, 0.001. I can't remember exactly, but you make a ton of money in this market. And that's the important thing to understand. Because as you guys see on the screen, the price is quoted as 68.12. And what you saw in the contract specs were three zeros and a one at $5 a tick. So if we collapse that, take off a zero, that becomes 50. If you take off another zero, that becomes 500. So um, that's kind of what we're working with here, apparently. Somebody's asking me if I like P hex the best. No, I don't like P hex the best. I like hex the best. And if you don't understand what that means, then that means you have more work to do. And you need to learn what crypto is. So going back to 2010 through 2011, this was a 2 year bull run. 2 year. I was in college at the time. I remember this because I rode this market for a little bit. Didn't have a clue what the fuck I was doing. I really didn't at the time. Wish I did, but I did not. Anyway, as you guys can see, the market went. Well, you can't see actually. Hold on. 170 points. All right, let's assume that each point is $5,000. That's at least almost $200,000, almost 100. Or I'm sorry, I'm losing my mind. 100 times five, so 500,000, almost times two, right? Because we're talking about five times 100. So then you add on 170. That's almost double the 100, right? So big moolah. And that's why we like futures. Because you see, it says 414%, but that's just the price of the contract. That's not the actual move that you make. Or 2020 through 2022, and that was almost 2 years too. So, are we entering a space where we're gonna see a big bull run? I don't know. Are we seeing the type of supply destruction in the market at this point that could line us up for that? Maybe, maybe, because it really depends on the demand destruction. So, let me explain kind of this weird thing about economics that's very difficult for people to accept. But it's important because that's how we get these big booms and busts. If we know cotton exists, how does it ever get to a point that it can make these types of runs? Right? Think about that. That's the question you should be asking yourself. Same thing with any commodity. We know they exist, so why don't we just keep a store somewhere of all these motherfucking things? But we don't do that. So that's exactly why these price runs happen. Because only the smart money is keeping an inventory of a commodity so that when they actually do see a run like this, guess what they're fucking doing? They're unloading whatever they don't need to operate, and then they're buying the dip again. Simple as that. Because it's a commodity, it's always going to exist because people are always going to need it, so people are always going to produce it. One plus one is two. Now, what you have to understand at that point is that if, as a whole, the market isn't doing its job as far as keeping up with inventory, supply, and what they need, well, then you get runs like this, right? And the cool thing about it is that we're just talking about one market right now. We were just talking about crude, and crude is entering in that into that the supply disruption cycle where we could see a move like we saw in 2010. I'm sorry, 2014. I mean, imagine that. People have been waiting for that since that point in time because it was that crazy. And that was actually July. So it would be nice. And we have a similar setup. Similar setup. I'm telling y'all, and it could come out of nowhere. But we'll see. We'll see what the headlines are talking about. Because if the headlines get bearish out of nowhere, the odds of it happening are low, right? Because then the market is trading all in that direction. Now, the only thing that's supporting this move is the curve, the futures curve. And what it means is, I don't know if you guys can see this over here. Um, I don't think I could even expand this. Nah. It's priced lower than the present. The present has to catch up to the future. The curve that the market essentially calls people to action when it takes that shape. And this is one of those shapes. High point out here. So theoretically, we should be probably something like $5 lower for the curve to be normal or shaped normal. And that's kind of when you start looking at, and I've touched on it before, but not really because it's too advanced of a topic to talk about. But if you look at the first 2 month spread in crude oil, because you guys got to remember these are monthly contracts for crude oil in this futures market. So what that means is that every month, this little sign right here represents a contract switch. So you go from September to October. And then soon we'll be going from October to November. But before September and October, right, we went from August to September. And so on and so forth, going back in time. So when we're looking at the generic composite spread on TradingView, is just showing you the first month minus the second month. And what were we just looking at in the forward curve? This isn't going to have one because this can't have one. It's a spread itself. Remember that the prices in the front months were higher than the prices towards the back in the future, right? So if the prices in the front were positive or higher than the ones in the back, then the difference is greater than it should be. And apparently it should not be higher than zero. That's what that was telling us. So if you're a spread trader, which is a whole other topic, and you're able to get in shorts for your spreads, meaning you're shorting the front month, which is the contract that's trading at 66 whatever 66.33 right now. You're gonna sell that contract and you're gonna buy The next month's contract, which is trading at, let's see, there's a second contract trading at 64. So you're selling 66 spot 34 and you're buying 65 spot 68. And the difference is going to be approximately 66 cents, right? Because if we do 65, 68 plus 0.66, what do we get? We're going to get that essentially the front contract price. See, 66.34. And what's the front contract? 66.34. And that's essentially what's going on there from a fundamental point of view, because now you're entering into the professional arena of what these actual refineries and producers and all these different players in the market are doing. That's what it all becomes at that point. So it's a whole nother conversation, and it's not really for this type of stream. Gold floating, and we're gonna see that the moving averages are supporting that flotation. So you guys can see price is steady above the 34, which is in red, and the 55, which is in light blue. And that's just showing you that the strength and the trend is still there. Silver is not quite the same, but it is still holding on to the longer term moving averages, 144 period versus 233. Let's take a look at nat gas. Nat gas is structurally bullish right now, and the reason for that is because typically it trades opposite of crude oil. So if crude oil is dumping, typically it picks up natural gas in most cases. Heating oil is lower, of course, and gasoline a buck 88. So hopefully we'll be seeing that hitting the stores here soon. But it's important to remember that it's unlike the Trump era, right? During Trump, it was because of economic strength, because the U.S. was actually producing oil, and we do produce oil, right? But you got to remember that the current administration doesn't encourage any type of U.S. GDP at all. It wants all imports. And this is why they're so anti-tariffs. I'm actually should do. I should explain how tariffs work. So I work in finance, right, professionally, whatever. And I'm sitting in this goddamn presentation, and this fucking presenter has the motherfucking nerve. I guess these motherfuckers are being coached. I don't know, cause there ain't no way in hell you claim to be a financial expert and you don't know how tariffs work. But this motherfucker lied to a bunch of people in real time. And I don't know if it was a setup question, because this was literally the last question and then they fucking ended it. But it really fucking seems that way. Anyway, the motherfucker lied talking about the people pay the tariffs. And no, the people do not pay the tariffs. The way tariffs works is as follows. The tax is, and here's something you should also know. Everybody else in the world uses fucking tariffs. America is probably one of the few countries that doesn't impose tariffs on a consistent basis as part of its tax receipt structure. Anyway, if a tariff is imposed on a product, that tariff must be paid by whoever is importing that good or service. Excuse me, not by whoever's importing it, but by whoever is sending it in. In other words, the producers of the goods themselves. So if it's a foreign producer, somewhere out of China, Vietnam, whatever, Indonesia, they're going to be paying that cost. Not to say that it's not going to be embedded in the fucking price. Of course it is. That's the point. But guess what else is the point? The point of that is that it reduces the cost of domestic made goods. And it does that by reducing the cost of what should cost by default, because you no longer have to price things to account for income tax. You can pay people a fucking regular living wage because the cost of goods and services that are benefactored in the domestic United States will then cost X% less because it's made here. It costs less. You're not gonna pay no tariff on it. It's here already. There's nothing to import. And every other country operates that way. You go to any other country and you try to order something that costs a certain amount of money or whatever, it's going to have a tariff on it. It's going to have an imposed cost, an imposed tax that you, the receiver, are going to have to pay because that's how it works. So it's not that the consumer is going to suffer. No, we're not going to suffer as consumer because it's an economic structural change. So it's not going to be targeted pricing at the consumer level. It's going to be structured pricing whereby we're going to have more economic purchasing power because the cost of goods and services at home are going to be less because nobody's going to be buying international shit. You're not going to need it unless. And here's a funny thing. Here's a funny thing. If this is a big if this does happen and other countries start following suit, great. Because then what that means is competitive advantage actually takes hold. And what is competitive advantage? Well, I actually did a little piece on it in my Substack, so you can find a little more in depth explanation there. But in short, competitive advantage is when the appropriate producers are producing that specific good or service. So, for example, if you want to buy, I don't know, a good car, odds are you're not going to go to an American car producer because they're not known for making good cars. You're going to go to a Honda, Toyota, or something like that because those cars are known to be very reliable and last forever, yada, yada. But why is that? Why is that the case? Have you ever noticed how so much stuff is legislated into how goods and services are made in the US? That's why. So, looking at the dollar, today the dollar pretty much did nothing and went up and down and came right back around. And that's essentially what we see on a daily basis. And if we look at today's trade, the market opened up, hold on, here. Nope. All right, here we go. Market opened up here. So it opened up at 101.63, spot 63, and it closed that last trade 101 spot 64. So it literally went nowhere. And when you zoom out, that's exactly what you see. It went nowhere. So it'll be interesting to see what the market does tomorrow. Will it have a small range or will it actually extend upward? And look, given the structure of the market right now, it honestly looks like it's going to either trade sideways tomorrow or go up. Um, I'm hard pressed to see it going down, but anything is possible. However, moving averages on an hourly basis are saying upward. Volume is saying the same thing. As you guys see, the trend is up. And momentum seems to be reaching a trough. And we'll zoom in a little bit. Volatility is pretty stagnant, meaning it should flow higher. When we zoom in 21 minutes, pretty much the same picture. and momentum did seem to hit some type of terminal level here, whereas volatility is still being relatively weak. So this could definitely keep going higher come tomorrow if it's not capped by this 101 spot 68, 101 spot 70 level. So the market's in a pretty important spot. And what's interesting is that when you go take a look at what the Nasdaq is doing, right now it looks pretty bullish, right? It looks structurally sound. It looks strong. It looks like it definitely found support here. You got volume above the moving average on the cumulative delta, which is a reflection of all buying and selling. So the market is technically bullish with a positive value. Momentum is structurally bullish, right? Volatility seems to be also making a turn for the better, i.e., turning back around and upward. So, what's interesting to note and important to note before tomorrow's session is that we are still not out of the woods as far as price action goes, and we must be cautious because we're entering area of resistance in the market. We had a couple of inside days here, um, and we're entering resistance zone, i.e., the short-term moving averages, which is above price right now, which is only 110 points above where we're currently at. And that's not that big. And we're forecast for seeing that level tomorrow for sure. Um, Hold on, guys. So, excuse me. So, while the market is structurally bullish on the big picture, it's important to be aware of where the market is actually right now. So, long story short, you want to ultimately see the market recover this level where it stopped today and trade higher and coincidentally look at what's at level two for yesterday's session or the session that we had today on the 10th. It's 968. And what was this level over here? Let's zoom back in. 959. So 968, 959, approximately 9 point difference. Whereby we have the 5th of September and the 4th of September as areas of resistance as well, because they were support at some point. And this is what we're seeing 18,924. So we got interesting levels, interesting price action coming up. And this is just NASDAQ. This is just the NASDAQ. And the NASDAQ is, like we talked about yesterday, that leading market that when people are pouring money into stocks, this is the main market that's receiving it, just for the primary reason that money goes to where technology is, more so than not. At one point it was railroads, at another point it was planes, and so on and so forth. Right now, it's tech stocks as you know them, AI, and all that other crap. So there you go. Now, on the flip side, when we zoom out, we got to be cognizant of the fact that we are hitting a very important resistance area that coincided with a level and a moving average at 18,864 on a big picture basis. Now, this is 233 ticks per candle, which is 58 points and a quarter. Hold on. That should be far enough. Um, and as you guys can see, the trend is down. Right, it's down since up here, and here's that level we were talking about: 19,500, 19,590. Right, here we are, or 18,000. Oh, that's way above. Never mind. Hold on. Went too far. Went too far. Here's 19,000. So here's the fourth and the fifth. Oh my God. Hold on. All right. Um. So again, we want to watch for a couple things. We got resistance right here, which coincide with a couple settlement levels and where the market uh, did its last lower leg from, or last drop from. Right here, 18,960 area. So if the market gets back up there, the odds of it retracing from there are high, assuming it gets above here. Because if you look at momentum, it's weak right now from this perspective. If we zoom in a little bit more, it's getting close to reaching a peak, but it's not quite there when we zoom in a little bit further. So what do I mean? Well, it's still in a position where it can find support 18,800 area, right? Even though you see momentum is subsiding, but it's above the moving averages after a pretty significant thrust, right? Even though it's really essentially gone nowhere, right? Like it just kind of chopped around. Ultimately, it's up here though, and it's getting near this resistance area, and that's what matters is where it's at, not where it's been, but also where you think it's going, right? And that's why we gotta zoom out. And like we talked about yesterday, uh, it did its sideways consolidation. And yesterday when we wrapped, we were like right over here. Um, but the market traded into a settlement, rolled over, found a area of support. Let me zoom in a little bit. Traded into this area of support early in the morning, around 5 a.m. And from there, it kind of just launched into the open. And then it kind of sold off, or at least consolidated before selling off around 10 a.m. into noon. And note, traveled through settlement after tagging settlement, but then it fell through again after not being able to get bid. Man, I had to speak. Fuck. It was definitely quiet until I spoke up. Anyway, and then the market found a bid, eventually finding support once again at this area, right? And that's kind of what's important is just noticing that the market, even though it's coming down and rolling over, is finding support at relatively higher levels each time, right? And it's making higher highs as it's traveling as well. So if we wanted to throw lines on it, right, it would be upward sloping. And that's the important part. We're in an upward trend, and that's what we have to be aware of when we're watching markets. It's like the direction. And obviously, it sounds trite and duh, but it's so easy to get lost in a 5 minute chart, and people do it all the time. But you ain't seeing nothing on the 5 minute chart. You're just not. I mean, here obviously it's a short right now, but that's not my point. My point is, what if you can't see that it's a short because you're looking at a 1 minute chart, and on a 1 minute chart it looks like a buy, because that's what it looks like right now to the unsuspecting eye that missed the 5 minute view, or maybe even the 8 minute view where it looks super weak and is about to puke, right? And that's the kind of thing that people just miss all the time, because they're not giving themselves perspective. So we talked about the dollar, we talked about energy, we talked about gold. It's just floating. Let's check out bonds and then we'll wrap it up. And as far as crypto goes, you guys gotta understand that's long term. So you have to understand what you're doing with that long term for yourself, because this is not the bull run just yet. And we talked about why a while ago. And just to keep it short, it's important that you realize that they want people to, one side wants people to run to crypto, the other side wants people to disdain crypto. So you're seeing that battle play out right now. And at some point, we'll talk about tokenization and what that's supposed to look like, because they're already doing it and you just don't know. Hold on, guys. Anyway, I think that that plays into a lot of the stock selling you're seeing from the Warren Buffetts of the world, more than anything else. And the average person is not going to be in tune with that because they don't fucking know. What does anybody know about anything out there in terms of finance? I mean, they're watching 13Fs to see who's doing what. They're not watching the tape. So these people in general are lost. Um, and if you do the 13F, then that's cool. Don't get me wrong, but man, the charts are just as good. I don't know why you would need to do that. Anyway, looking at bonds, they're looking strong. And people are just sleeping on them. And it's like we talked about a long time ago. Get through this 121 level, and we're probably going to be clear for takeoff to 129, 130, and we're getting close to it at 126, almost 127 handle. Um, and we traded this high back on the 31st of July, and we already eclipsed that high. So the odds of us keeping going to 135 are pretty high at this point. The question is, will we see resistance at 129? And odds are we probably will. I'm sorry, 130, not at 129. We probably will at 130. So we'll see how it goes. We just keep it going as far as the price action goes, because it's there. It's there. So that's bonds, and ag is ag. Let's just take a quick look, just because I like to look. Corn still doing this corn thing, and these contracts, you gotta look at them individually. Hold on, guys. All right. So as far as corn is concerned, it's retracing right now. All right, trying to find its footing before taking off, so to speak. Soybean oil um, just seems weak to me, unlike corn. But we'll see how corn finishes out, because, like I told you guys before, ag is very misleading. You got to be very with the trend and very with the long term moving averages. Oats ripping, soybeans still tripping, as in going lower, and it's under 10 bucks bushel. Wheat looking bullish, which is interesting for this market because it really means it's trading sideways. But you just got to pick your spots. So that's what's going on with the market today, guys. Again, as far as crypto is concerned, this is the opportunity that's not going to be present once it's no longer there. And to be honest, it's like we talked about before. You don't need to look at the charts every day to understand what you have to do when you understand the mission long term. So do yourself as a favor, learn what crypto is for real, not from some moron on YouTube that thinks he knows, but actually go read a fucking white paper. If you cannot read a fucking white paper, then you do not know anything at all that you should know. Because if that's too hard for you to read, then you shouldn't be putting your money at risk in this game. Period. Because that's the basis of all analysis that is done in this spectrum of technology over here. And if you can't make sense of the technology, then you definitely need the fucking white paper. That's why Hex didn't need a fucking white paper. Because it's so straightforward that you only really need to learn the definitions and what they mean. Other than that, do your homework. Don't let anybody feed you crap that they don't understand. And that's a lot of people. So, if you don't know, then somebody sold you a story. And that's the thing that's difficult for a lot of people to accept about not being experts in everything. I'm not an expert in everything, but guess what? I'm not afraid to read anything. I am not afraid to read anything. And that's the difference between me and the average human being. That's it. There is no other difference between me and everyone else besides that. But if you don't want to do that, I mean, somebody else is going to read for you and they're going to know more than you. And they're going to tell you what they want you to know, not anything else. And, people have a hard time accepting that it's okay to not be ignorant. Took me a while to accept that. But, you know, it's okay. It's all right. And what I want to do for the crowd before we sign off is I want to actually lay the levels on here so you guys can see how they get posted before the market action actually occurs. And I'm not placing them on there after the day happens or whatever. I'll just drop these on here and we'll see what we actually end up having at the end of tomorrow. In my opinion, if the dollar is in fact the dollar is in fact impacting assets globally, like we think we see. I mean, the interesting thing is like crude oil stands out right now because typically the dollar and crude oil trade inversely. But that's how bad the economics are right now. That if crude oil is finding reason to fall over, then maybe, just maybe, we're not out of the woods yet as far as equities are concerned, and, and then continuing to move north. So, as far as I'm concerned, excuse me, guys, higher volatility for tomorrow. Uh, and, excuse me, and I am guessing that we are going to see the market trade lower overall based on the big picture that we were just looking at moments ago. And I will zoom out before I sign off to give you guys that last visual so that it's pretty clear what I'm trying to say. Um, Yeah, that would make so much sense. So let's go out to 377 ticks, or yeah, ticks per range. This is equivalent to $1,885 per candle. Now, looking at this chart, um, we could definitely trade up to 18,925, 18,998. It's 19,000. Again, what were we talking about earlier? Uh, Pretty much around there, 18,965 was the level, or 59, as it ticks lower, because it's ticked lower now. Um, yeah, 57.73, and it was 59 at the start of the stream. So we're already rolling over, ticking over, because the market is showing weakness at this 18,862 level. Um, and as you guys probably noticed, that level was printed back to back off the settlement and then off of volatility itself. Um, so it's a pretty significant area. But back to the bigger picture, you know, looking left, we have this area of previous support here that the market has kind of breached into, right? Looking at this level here, we're looking at, yeah, 18,822. That's what this level is. And we're all the way 11 points above it. Right now, we traded all the way 50 points above it. Now, remember that this is 377 ticks per candle, which is equivalent to 94 and a quarter points. So this market traded up approximately 50 points past that 22 level, 822 level. So it's not really out of bounds, and it's actually reversing now. And that's kind of what we're seeing. So as it stands, let's take a look at momentum. We're still below these peaks, these previous peaks. I want you guys to make sure to see that. Uh, Even though we're making a new high. So we have lower momentum at a higher price level versus a previous local high. All right, that's pretty critical. That's almost a negative divergence right there. And then volatility is just not tapping, it's just not moving with any strength to the downside or the upside as you see it. And that's important, because what that means is that this move could be experiencing trend exhaustion. And that's kind of what I'm suspecting we're going to see from the market tomorrow. And this is why, for example, market looks like it's rolling over. You should probably be short and not be waiting. And it's trading off pretty nasty right now. Let's go to the 89 tick. Yep. So, the market after a certain point just picks up on the decrease in momentum and just starts to pancake. And that's what we're seeing now. So we'll see how the market shakes up tomorrow. Tomorrow is Wednesday. Shoot, I don't think I'm going to be able to stream tomorrow. So we'll probably pick it back up Thursday. And if you missed my beginning little spiel on de-dollarization and how it's visible everywhere and culture and whatnot, I went over some headlines and all that stuff and kind of highlighted how all of that stuff is visible just in culture and society, de-dollarization. And we'll just keep talking about it, because it's not going to be a theme that ends anytime soon. It's going to be a prevalent theme moving forward, because that's going to really impact the markets in a major way. All right, guys. Thank you for tuning in. Catch you on the next one. Probably be Thursday. Peace.